Most people don't realize how dramatically life insurance rates change with age. A small difference in timing can mean thousands saved over the years. That's why understanding age-based pricing is essential. Life insurance companies rely heavily on age to estimate long-term health risks. The younger you are, the lower the statistical chances of serious illness or death. This is why early buyers benefit the most. Let's start with your 20s, a decade often overlooked in financial planning. Many young adults don't think they need life insurance yet, but this is actually the most affordable time to secure long-term coverage. In your 20s, premiums are typically at their lowest because your health is usually at its peak. Insurance companies reward low-risk applicants with cheaper rates. Even a $500,000 policy can cost less than a few dollars a day. Locking in coverage early also protects you from future health issues. If a medical condition develops later, you already have a guaranteed policy in place. This can save you from steep costs in your 30s and beyond. Moving into your 30s, life starts to shift. Many people begin settling down, buying homes, or starting families. These new responsibilities make life insurance far more important. Rates in your 30s are still relatively affordable. Though slightly higher than in your 20s, you're still considered low risk, but not at the same peak health baseline. Even so, this is still an excellent time to secure a long-term policy. For many families, this is the decade when financial protection truly becomes essential. Life insurance helps safeguard income, mortgages, and childcare expenses. Having coverage brings peace of mind during major life transitions. Your 40s introduce a different financial landscape altogether. Responsibilities grow, income stabilizes, and dependents may still rely on you, but your insurance rates will be noticeably higher. By this age, mild health issues become more common. High blood pressure, cholesterol, or early medical concerns can raise premiums. Insurers begin to factor in increased long-term risks. In your 40s, affordability is still possible with the right approach. Many people choose term insurance during this decade to balance coverage and cost. This keeps protection strong without overwhelming premiums. For those in their mid to late 40s, underwriting becomes more detailed. Companies look closely at medical history, lifestyle choices, and family health risks. These details directly affect pricing. As you enter your 50s, life insurance becomes significantly more expensive. You are now considered a higher risk applicant due to age alone. Even excellent health cannot fully offset the age factor. Medical exams become more sensitive to minor issues. A condition that would barely affect a younger applicant can double the rate for someone over 50. This is why waiting too long can limit affordable options. Many people in their 50s choose lower policy amounts to reduce costs. Others extend their existing policy instead of starting a new one. These strategies help maintain protection without overwhelming expenses. That said, coverage in your 50s still plays a valuable role. It can protect spouses, pay off remaining debt, or support end-of-life costs. Even partial coverage is better than none. One of the biggest mistakes people make is assuming they can wait until later. Life insurance pricing doesn't work that way. Every year you delay raises the cost. Another common misunderstanding is thinking employer insurance is enough. Workplace policies usually cover only a fraction of what families actually need. Plus, that coverage disappears when you leave the job. Age-based pricing also depends on lifestyle habits. Smoking, heavy drinking, or risky occupations increase premiums at every age. Even stress-related health issues can influence eligibility. Maintaining a healthy lifestyle can lower your rate class. Good medical results, regular checkups, and stable weight make a difference. The goal is to present the lowest health risk possible. If you already have a policy, reviewing it regularly is important. Life changes quickly, and coverage that fit your 20s or 30s may not fit your 40s or 50s. Adjusting your policy can keep your protection relevant. Term life insurance remains the most affordable structure at almost every age. It offers high coverage for a predictable monthly payment. This makes it ideal for families and long-term planners. Whole and universal life policies become harder to afford as you age. They offer lifelong coverage but require much higher premiums. These options work best when purchased early. No matter the age, The key is balancing coverage needs with budget. Think about debts, income replacement, dependence, and long-term financial goals. These factors shape the right policy size. If you're in your 20s or 30s, acting early creates the strongest advantage. If you're in your 40s or 50s, acting now prevents rates from climbing even higher. Either way, time is the biggest factor. Comparing quotes is essential. Rates vary widely between companies, even for the same age and health profile. A few minutes of comparison can save you hundreds per year. Talking to a licensed advisor can also help you avoid guesswork. They analyze your age, health, and financial goals before recommending a policy. This ensures you get coverage that truly fits your situation. Life insurance is ultimately about preparing for the unexpected. Every age group has its own risks, and every decade brings new responsibilities. The earlier you understand your position, the better protected your family becomes. So whether you're in your 20s, 30s, 40 segundos, or 50 segundos, now is the right time to make an informed decision. Age will always influence cost, but smart timing can secure long-term benefits. Protect your future by acting before the next birthday raises your rate again.